Today, we're going to dive into the mind of an absolute legend, Stanley Druckenmiller. We're going to unpack the core principles that helped him build one of the most incredible track records in the history of finance. So let's get right into it.
So just how good was he? Well, let's put some numbers on it. For over 30 years, 3 decades, his fund, Duquesne Capital, pulled in average annual returns of over 30%. That is just a staggering, almost unbelievable level of performance to sustain for that long.
But here's the part that is truly insane. The consistency. Since he launched back in 1981, his firm never had a single losing year. Not one. I mean, think about that. Huge returns and 0 down years. That's the holy grail in investing.
So, naturally, the big question is, how on earth did he pull that off? Well, it wasn't some magic formula. It was a powerful and kind of unique set of rules he lived and died by.
All right, let's kick things off with his first rule, which is all about how he came up with his ideas in the first place. It was this really interesting blend of super deep, rigorous analysis and a healthy respect for what the market was telling him. He had what he called a two-lens approach. So he'd start with the fundamentals, the deep economic story, the why. Why should this stock or this currency move? But that was only half the battle. He would only actually make the bet if the market itself agreed with him, if the price on the chart, the what, was confirming his thesis.
And this quote right here, it says it all. It shows his humility. It didn't matter how smart he thought he was or how great his analysis was. If the price action was telling him he was wrong, he listened. He always assumed the market just might know something that he didn't. Okay, on to his most famous principle, and this one is a game changer. Druckenmiller basically threw the whole idea of traditional diversification out the window. He believed that when you find one of those rare, high-conviction ideas, you don't just put a little money in. You go for the knockout punch. And there is no better example of this than the trade that made him a legend, the bet against the British pound. I mean, the setup was just perfect. You had Germany recently reunified with a booming economy and a super strong currency. At the same time, Britain was stuck in a nasty recession, but its currency, the pound, was pegged at this artificially high rate. This economic tension was like a rubber band being stretched to its breaking point. Something had to give.
So, Druckenmiller sees this once-in-a-lifetime setup. He goes to his boss and mentor, the one and only George Soros, and he lays out his plan, a massive $5 billion bet that the British pound was about to collapse.
And Soros's response is the stuff of Wall Street lore. He basically told him the idea was ridiculous, not because it was too big, but because it wasn't nearly big enough. He told him to triple the bet to $15 billion. When you have that much conviction, you have to go all in.
But here's the really genius part, and you've got to get this. The currency trade was just the beginning. Yeah, they made a fortune when the pound broke, but they made even more money on the ripple effects. They bought British bonds, which soared. They bought European stocks, which also rallied. It wasn't just one bet, it was a grand slam, playing every angle of their one big idea. So this brings us to the third and final rule. And this one is all about what's going on in your head. Because, look, it's one thing to have a great idea. It's a whole other thing to manage the wild emotions that come with winning and losing big. So let's talk about winning. When things are going your way and you're having a great year, Druckenmiller believed you're basically playing with the house's money. And that is the exact moment you should be your most aggressive. He said the easy thing to do, the thing your emotions are screaming at you to do, is to take your profits and play it safe. But he learned that when you're hot, when the market is confirming you're right, that's precisely when you press your advantage and turn a good year into a legendary one. Okay, so that's winning. But what about when you get it wrong? Well, his most painful lesson came during the dot-com bubble. He called it an absolute nightmare that pushed his discipline to the breaking point. And the crazy thing about this story is that he was right at first. He got out of tech stocks in early 2000, right before the crash. Brilliant call. But then he had to sit there and watch other managers keep making insane money day after day. The FOMO, the fear of missing out, it just ate him alive. And his own words here are just so brutally honest. He admits it. He lost his cool, threw his discipline right out the window, and FOMO'd back into the market at the absolute worst possible time. He lost billions. It's just a powerful, powerful reminder that no one is immune to emotion. So when you put all these pieces together, The analysis, the courage to bet big, the psychological mastery, what does it all add up to? What is the ultimate edge here?
Well, it all comes down to a certain mindset. It's not just about being the smartest person in the room. It's this whole package, right? It's having an unbelievable drive to win, ironclad discipline, the raw courage to bet big when you have the conviction, and that absolute emotional control to know when to push your chips in and when to walk away from the table.
And this final quote just perfectly sums it all up. His risk management wasn't some fancy algorithm. It was his gut. It was watching his profit and loss statement every single day. He said you can just feel it. You can pick it up when the market starts acting funny. Which leaves us with a really fascinating question to think about. In our world today, a world that's being completely taken over by algorithms, AI, and quantitative models, maybe, just maybe, Druckenmiller's entire career is proof that the ultimate, lasting edge in the markets is still something fundamentally human.